So today's theme at Singapore Maritime Week is sustainability and innovation. And the next panel features some of Singapore-based innovators who will discuss how their respective companies and how the maritime Singapore ecosystem is leveraging technologies to create some efficiencies, new business opportunities, and maximize returns on capital invested in shipping. I would like to call on to the panelists to come to the stage. So I'd like to introduce to you the panel. We have Mr. Tarun Mehrotra, Chief Strategy Officer at RightShip. Thank you, Tarun. Mr. Nakul Malhotra, Vice President, Emerging Opportunities Portfolio, Maritime Services at the Wilhelmsen Group. And Mr. James Ong, Head of Mergers and Acquisitions and Strategy at IMC Pan-Asia Alliance Group. This session is moderated by Mr. Joshua Politis, who is Deputy Managing Partner at Transport Capital and Chief Investment Officer at the newly launched TC Ventures, which aims to invest in promising startup businesses innovating in the shipping space. The title of the session is Innovation and Technology of the Maritime Singapore Ecosystem. Thank you.
Thank you, Andrew. So I'm going to take a little bit of liberty as moderator of this session. And, innovation and technology in maritime is very broad. So I think I'd like to, especially given, the panelists we have and that we're at Marine Money, focus more on, the startups and the investors behind these startups and the venture capitalists that are funding these startups. Because, I've been coming to Marine Money for many years and participating. I don't think we've had, or at least not in Singapore that I can know of, a panel focused on venture capital. And I think it's an important source of capital, right? I mean, the big themes that we're talking about through this conference, and we've been talking about for years, ESG, decarbonization. You need various sources of capital. You need the governments. You need, like a few panels before, the NGOs to be there. You need the banks to finance. You need the equity providers. But you also need the risk capital there to fund some of these. I think it's, these radical changes will not happen without it, right? And I'll also, in keeping to this theme, disrupt this panel a little bit and not do it in a traditional way of, just asking questions, but more of a discussion around some key themes. And some key themes that, we, grappled with and spent a lot of time over the last 6 months, thinking about when we started looking at venture capital focused on the maritime space. And really, around, is shipping really ready for these startups, for this radical innovation to try out these different products? Is a maritime market big enough for a venture capital investor to get these kind of returns that we need? As we all know, it's a fragmented market. You need a lot of different companies to implement, these new solutions. And also a little bit, about what are ship owners doing, what are venture capitalists doing, what are different parties doing around this, and especially in Singapore. So maybe, why don't we start off maybe with Nakul on the first topic? I mean, do you think shipping is ready?
Thanks very much, Josh. And first of all, let me say I'm super excited to be here at Marine Money and sort of having this VC lens. In many respects, I think today's milestone event because Marine Money and VC is almost a contradiction in terms. So hopefully we can try to change that over the course of the next generation, let's say. Is shipping ready? Look, I think earlier on, and I heard quite a lot of the discussions earlier today, are really talking about massive one-off investments, big infrastructure projects, and typically, I think from a VC lens, that isn't really the spectrum of investment that kind of makes sense, and that's perhaps one of the reasons why VC money as such has stayed away from shipping. I think where we are now is we're in a situation where the regulatory environment, the operating environment, the sort of needs of the various stakeholders, the demands are changing so fundamentally. And when everything is in flux, that's exactly the time that sort of the risk money and VC money can really come into its own in a slightly different way. I think I think I'm gonna just obviously lots to say, but I think let me just say this is that it is a little bit ironic. Most recently, I think it was PitchBook that actually described maritime as an emerging VC opportunity space. And that's really interesting because I heard somebody say that the first ship was built in 2000 BC. So 4,000 years ago, we've been managing to deal with shipping, and yet from a VC perspective, we see this as an emerging opportunity space. And I think it's emerging for a lot of different reasons. I think it's emerging because there's the covers of what is maritime is finally being lifted. It's the recognition that it's part of a much bigger supply chain resilience thesis is a lot more embedded. And I think there's, hopefully during the conversation right now, we'll unpack some of those theses. But I think the bottom line is that it is extremely nascent. We need to recognize that just the sheer number of maritime startups aren't enough. At the same time, though, it's a phenomenal opportunity space, and I think VC money, or at least a VC lens, is really an important element in a lot of the shipping fraternities' spectrum of investment allocations now.
Yeah, and I mean, I think also just in terms of market size, right? I mean, it's hard to define, but I mean, talking about, someone was mentioning earlier 1.4 trillion, for decarbonization. I think Clarkson's came out a few days ago talking about 3.4 trillion. And that's just one part of it, right? The value of the ships, but the whole ecosystem around that. I mean, I think a venture capitalist usually look at a market size of 10 billion plus to think that's worth it. So I don't know, Tarun, do you have any thoughts on that?
Yeah, sure. I think just to answer that question, if the three of us had a recipe of providing 30x returns from a VC perspective, probably the room would be even more fuller, right? But jokes aside, I think what's fundamentally changing now is, as Nakul mentioned, and pun intended, the iron curtain behind which the shipping industry was operating is coming down. Essentially, ships have been existing to move people from A to B, from goods from A to B, and the problem of the users of the shipping industry is now coming to the forefront. So if you think about transparency, decarbonization, the moment you are going back to the drawing board to solve some of these problems, you got to have risk capital. Now, it's not just purely from a capital perspective, it's also about the approaches to solve some of these problems. So let me give you an example. Marketplaces. I think we all use marketplaces in our daily lives. Flexport has just come out of a funding round. What's really interesting is the backers of Flexport. You have somebody like an A16Z now standing up and saying, I want to take a bet in the maritime industry. Now that is really interesting. Was capital access a problem for Flexport? I don't think so. But it's the approach, it's the lessons that A16Z brings from some of the other industries. And if you think about, every single panel that we've all been to, irrespective of the theme, talks about collaboration. Within the industry, outside the industry, but let's sort of get, our ducks in the row and let's put the money where the mouth is. Let's really do it. And once you have some of these capital allocations coming from outside the industry, they're going to bring their know-how, their ways of working, which is probably fit for purpose for the shipping industry.
Yeah, no, I agree completely, and I think it's just a completely different way of thinking, right? And I have yet to meet a startup that's trying to do things worse or trying to pollute more or try to do things less efficiently. So a lot of the problems that we're grappling with, yes, it won't be the solution for everything, but I think, it's a big part of that. So, James, maybe you want to talk a little bit about, you come from outside the industry, more from that VC perspective. So I think your perspective would be super interesting.
Thanks. Yeah, so you're right, Josh. Actually, I come from outside the maritime industry, even though I work for a maritime company. And when someone asks me, where do I work? I say I'm in finance, I'm in a maritime company. But I've actually been in supply chain for the last maybe 10 over years. And in the past life, I've been in 3PL business, which is on the logistics side. And what I see in the past 5 years ago, the disruption when it comes to transportation on land, I see it's coming on the maritime side. I think things are changing, which is why at IMC we set up our venture arm. I think there's a lot of stuff that is coming on board, whether it's information from the vessel side or whether it's weather data on the port side, etc. So I think there's a lot of stuff which are happening. When it comes to investing, for us at IMC Ventures, we look at it from pre-A to A rounds, startups globally. And I often get a question, are there really maritime startups to be invested in? And I've actually been looking in the last maybe year and a half. I think there's some MPA people here, but it is not easy to find a maritime startup to invest in. Although we have invested in one here in Singapore, what we're here to do is trying to build that ecosystem up. And one way of doing so is to invest in not just a pure maritime startup, but in what I like to call ancillary maritime. So take, for example, supply chain financing. It could be financing the goods in transit while it's being shipped from one place to another. It could even go to the other extreme, where at IMC we also are looking at the wellness and well-being of seafarers. Right? Just now we had one of our speakers mention about the wellness and well-being. So we are looking at an app which can help our seafarers better alleviate their mental wellness and mental health on board the vessels while they're traveling. So this is what I call kind of ancillary maritime, which touches the maritime industry, but might not be a direct maritime application.
Yeah. No, I mean, that's really interesting. And I think, shipping is in a sense a very conservative industry. Yet what I find surprising is the amount of, companies like IMC and like many others who have set up, their own corporate VC arms. And I think, yes, like you say, shipping is its own industry, but it's also kind of straddles many others. And so, I mean, it'd be interesting to hear your views. I mean, I think there's always that difference between, purely focused VC versus corporate VC. I mean, is shipping really, is that the model for maritime, for shipping, or?
Yeah, I'd love to weigh in on that. This doesn't work now. Okay, we're swapping. This is a new talent we have, swapping mics as well. CVC versus pure VC, I think it's all about a maturity exercise. Again, I think really a lot of us who've been involved in shipping innovation for a while now, we started first pretending like we knew all the answers to everything, and we wanted to work with a startup on an exclusive basis so that they wouldn't work with anybody else, because that work was going to be the competitive advantage. And then you realize over a period of time that actually, there is no winner takes all here, because there's simply no winning without more sharing. And so we sort of enter then into this open innovation philosophy, a lot of platforms where a number of different corporates can come together, and you kind of de-risk the collaboration decision on which startups you back. I'm talking on a non-equity basis now, by almost having a little bit more of a consortium approach. And then what happens is you find some of these solutions super exciting, and then you want to invest so that you have aligned goals, you want to participate in the upside of the startup. And so you take it to the M&A teams that we have. And the M&A teams we have are absolutely fabulous in being able to set up business cases on project finance, or being able to set up on forecasting basis, EBIT multiples, and so on and so forth. And of course, I took a whole bunch of these, and every time I'd plug it into our templates, I mean, current EBIT 0 of the startup, and no matter how many multiples of that I'd just never get the approvals. And it's totally insane, because the cost of trying to set up those business cases is actually more than the check size I'm looking for. So then you sort of come to this maturity stage where, okay, you need a structure, you need some way of being able to do this in a better way, and then that's where the fork in the roads takes place. So either you set up a CVC structure, or I guess a pseudo CVC structure, as maybe people are more comfortable with, or you go in as an LP into a VC fund, but you don't go into you have the option, right? You can totally do it on financial returns and it's a blind fund, or you go in to a fund that is strategic in nature, that really connects with its LPs, so that you can offer the investments in the smart capital. Just because of where supply chain is, because where decarbonization is, because of the kind of press that a lot of these issues have been having, capital or access to capital for good quality startups is really not the problem. What all of us on the stage, I think, and many of at least what I call the maritime VC community is concerned about, is how do we get allocations into those startups and it's because you got to bring something else to the table. And so that corporate consortium approach, whether CVC or not, is something that I think is really an area that we've got to break down, understand, find like-minded partners, and really move on with.
Yeah, no, I mean, I agree 100%. And I mean, what impressed me the most, just coming into this industry, you know, more from the traditional side of shipping, is just how collaborative it is. And it's collaborative by nature, right? You need this. You know, that's just the best way you'll get your returns is by collaborating. You don't want all the risk on these startups, right? Most of them will go bust. So you want to collaborate, and you want to have different perspectives and different ways of helping these startups. And I mean, yeah, I think in the end, you know, capital isn't a problem for the biggest startups, but we also need to somehow incentivize these crazy entrepreneurs to come in and develop solutions for maritime, and these crazy investors who are going to come in fully knowing, you know, that they might lose all their money. So I don't know, Tarun, do you have any thoughts on?
Yeah, sure. I think just picking up on the open innovation aspect. So as RightShip, we are owned by 3 of the largest charterers in the world, so Cargill, BHP, Rio. We have aced in terms of the vetting outcomes. Our platform is digital first. We deliver safety outcomes. The key point had been so far that if you had to access RightShip outcomes, you had to become a RightShip subscriber. Just today, we've announced a second partnership with a French startup, ShipFix, where essentially our outcomes for the right subscribers would be available into their ecosystem as well. And the challenge with ShipFix was access to capital was not a problem for them. It was essentially that whole consortium approach. How can we as an industry join hands with some of these solution providers to try and scale it? Because the thinking within the maritime industry even today is, you know, my know-how is my competitive advantage. And we've seen time and again panels, even today, talking about collaboration. But ultimately, you got to put action on the table and demonstrate to the industry that it's viable to open up the floodgates. Why I mean, in the tech space, you're talking about APIs. In the non-tech space, about giving them sweat equity as well in terms of marine expertise. I think these are some of the very low-hanging fruits. I think fundamentally for the shipping industry, the challenge is about the mindset. As Nakul mentioned when he was working on business cases within his own organization, it's not unique to his, the problems are not unique to his company. It's across the board. It's about giving the comfort to try new things with an element of risk, both from a capital allocation perspective, sweat equity allocation perspective. And potentially, you know, things would go wrong. But I think the problems that we are trying to solve are really hairy. So it's not going to be one winner takes it all, right? And it's that sort of approach that we all need to get comfortable with.
Yeah, totally agree. So, you know, just tapping onto the point on culture. So a lot of people ask me, you know, why did IMC set up our CVC, right? You know, it's a good question, right? So we thought about it. Our CVC is actually $15 million in size, US 15. You know, if we double that, it becomes 30, right? If we triple it, it's 45 million. 45 million won't move any balance sheet at IMC in any way, shape, or form. So it is, you know, it's not the monetary aspect, it's more the cultural aspect. So we see startups as a way of changing the way that internally, how do we think about technology? How do we implement technology? So when we first brought the first startup into the ecosystem, I went to our operations team, and I'm not an operational guy, so, you know, I kind of struggle with the terms. So I went to the ops team and said, you know, this is a startup, ABC, you know, what do you think? Can you collab? The guy said, you know, let me think about it. 2 weeks later, no news. 3 weeks later, no news. So, you know, when it comes to such implementation, it's very tough. So what we did was, after a while, we realized this is not going to work. So I'm going to bring the operational team into our fold and let them be part of the innovation team. And then that quickly changed the way how we adapt to technology and how the mindset has changed from one as a ship operator to one as a person who is embracing technology and embracing what's out there. So from an investment standpoint, it's more than just a financial perspective. It is also a cultural change perspective.
Yeah, no, definitely. And I mean, I think one of the most interesting things I found as well, you know, just jumping into this world and speaking and meeting with all these different founders and startups is also just being exposed to, you know, a different way of thinking and being at the, you know, looking at problems in a different way and trying to find ways to innovate. And so on that point, I mean, how do you guys see Singapore as a startup hub, with the lens of maritime, right?
So I think, I guess, let me open by saying that there's a really good reason that Singapore was voted #1 as far as a leading maritime capital of the world, also from a marine tech perspective. I think the starting point of the distance between, from a government perspective, thought and action, and actually putting in some of those catalyst frameworks around funding, around regulatory sandboxing, I think has been extremely positive. I think it's also, Singapore has this unique situation of being a really important bunkering hub, a really important ops hub, an extremely important ship manager, ship owner hub, and also now with various private-public partnerships like SG TradeX and a whole bunch of others, starting to create kind of like a digital infrastructure hub as well. And I think the confluence of all of this lends itself really well. I think the other element of it is, I always look for leading indicators, as does everybody. And I think one of the big mind shifts that I've had to do personally is, I always thought of customer adoption as being a leading indicator. And I realize now that customer adoption is actually it's about timescale, but customer adoption is actually a lagging indicator, because by the time customers are adopting a solution, it's already been funded close to Series A. It's already got some level of clarity on the solution and so on and so forth. So now I look at talent and capital, and I think the fact that VC structures globally, and Silicon Valley everybody calls is the benchmark there, is prevalent everywhere. But maritime VC, Singapore seems to be creating this little hub for maritime-specific VC. Also in terms of talent, the Techpreneur Pass, you're seeing several startups that were originating in the US and Europe, changing their place of location, coming to Singapore. So from a talent and capital leading indicator perspective, starting to see some early signs that this really is yielding some benefits of a lot of those intentions.
Just to give you an anecdotal example, historically in the VC space, probably in the Bay Area, they followed signs of number of patents coming out of MITs and Caltechs and Harvards and whatnot. For the maritime space, I think the leading indicator is in Singapore for all the reasons that Nakul mentioned, but also the ecosystem of institutes of higher learnings, so the universities in Singapore, supported by MPA, supported by A-STAR and some of the other National Research Foundation. A specific example, there's significant time, talent, money allocation coming in around the use of AI and ML in the maritime space. And that's more from deep tech problems, network optimization problems, and not your sort of Horizon 1 optimization. Now, that tells you that the intent of the ecosystem in Singapore is to follow through and solve for some of the harder problems in the maritime industry by using not just the user ecosystem, but also the research ecosystem that's available in Singapore. And not just in Singapore, using this as almost a springboard to connect into some of the other research ecosystems around the world. So borrowing a leaf out of the whole decarbonization journey, right, where you have the center in Singapore collaborating with the center in Copenhagen. Same thing can be mirrored for what's happening in the AI and ML space as well.
Yeah, so I think Singapore is a great place to start the company, especially when you're looking from a Southeast Asian perspective. I think what we need to think a bit more deeper about is exits. Haven't seen that many great exits. You got a couple on Grab, which has gone to the US, but the share price hasn't been doing well. The larger kind of Southeast Asian IPOs actually have been happening out from Jakarta, not here in Singapore. So I think the ecosystem needs to think, how liquidity events here in Singapore, especially from the Singapore startup perspective, needs to happen, and how we will kind of evolve around that. Yeah, so that's my.
Sorry, Josh, I just wanted to add a little bit onto that, because I think that whole exit strategy piece is kind of important here. So from a maritime perspective, one is also the entry piece, right? Because from our own experience, I mean, you know, we had an in-house venture, we developed it, we thought it was a great idea, spun it out with a partner, and then we had to freeze it because of a whole bunch of reasons, and there just wasn't that adoption. By the same token, we have another spin out that's doing really well, and then we have another one which we've spun in and realized that, wow, this is actually really close to our core business. And again, from a startup space, I think, you know, we need to distinguish between, so the first thing about this VC lens is sometimes we're just really colored by the B2C space. And so what good looks like for B2B and what good looks like for maritime B2B is actually a little bit different. So you know, you don't need a $1 billion revenue line to be able to be a really good maritime B2B piece. I think the exits, and you're absolutely right, I think, you know, standalone, going into IPO, great exit. But I think for maritime particularly, some great exit examples could hopefully in the future be also coming into corporate, strategic takeovers, a number of different successful startups coming together to create a total solution because of individual features. I think that entire range of exits is just so much more rich, I think, in terms of its possibilities.
Yeah, no, I agree, and I think, you know, exit is definitely important. I mean, success stories are important in terms of attracting both investors and in terms of attracting entrepreneurs and people to work, you know, at these startups. So on that note, I mean, where do you guys see the most promising, you know, what you can call it sectors or you know, parts of maritime where you think, you know, or you've seen or you're seeing, you know, really interesting startups focus on?
Yeah, sure. In the last 1 year or so, you know, I've been looking at the industry. Right now, our focus is mainly on the data side. So how much data we can extract out from the vessels, whether it's engine performance, vessel performance, route optimization. So that's one aspect. The second thing for us is on the ESG side. So I'm sure you also know. But you know, on the ESG, we're looking at startups which are able to measure the emissions accurately, certify it, and then subsequently trade the emissions. We also are looking at potential green shipping, and when green shipping comes across many different forms on, you know, the fuel side, storage, and even the vessel side. So that's kind of our focus for this year. It's hard to say what will happen next year because technology changes so fast, but at least for 2022, that's our focus. Yeah.
I think I'll go back to sort of, you know, we're trying to work on this investment thesis, and I think from a maritime service perspective, we're seeing at least maritime service transactions and the maritime service value chain moving towards, you know, decarbonized, digitized, and an increasingly autonomous value chain. So not to be confused with autonomous vessels, but an autonomous value chain, and that's sort of like a North Star, is where you're starting to see, or let me rephrase that. A lot of solutions look at optimizing the current value chain with its complex handovers and takeovers. Now, our view is that an increasingly autonomous value chain means that you're increasingly simplifying and optimizing the total value chain. And so areas around transparency, visibility, obviously, areas around some selected marketplaces, so around freight, around, you know, the obvious products and services and so on and so forth. I think anything around, so I think the decarbonization piece from our perspective is really important, but I think we've got a separate, again, it's the spectrum of investment. So we've got a separate look in terms of the fuel transition itself. However, from a VC lens or a CVC lens, the fuel transition is likely to open up really important product and service segments in the digital space around it, and that is ideally suited from a CVC lens, we believe. And then also looking at, you know, we've got our core businesses in maritime services of ships agency, ship management, marine products, insurance, and so on and so forth. So around the current value chain, but also adjacencies, because we really do see in this bid towards efficiency and simplicity and visibility that the dynamic of the value chain will substantially change.
If I may. So from our perspective, it's essentially, you know, a 2x2. So there's the hardware bit of it, the software bit of it, spaces which are crowded with solution, with some interesting green shoots, and some, on the other hand of the spectrum, is solutions or areas that are really hard to solve for, but you're seeing some sort of capital and, you know, little dots of startups forming a solution hypothesis. Let me give you an example. Carbon capture, hairy problem across ecosystems. You're seeing startups within the maritime industry getting selected into things like Y Combinator. You're seeing startups outside the maritime industry looking at the maritime industry, you know, essentially to solve for space problems on board a ship. Now, that particular space, I doubt would be as crowded as a marketplace space by design. The other area that we're really interested in following keenly as RightShip is also the ESG transparency, where again, a lot of emphasis is on the E bit, for obvious reason, but sometimes we tend to forget the S bit or the G bit. In our case, we are really looking for solutions from a safety lens perspective, crew welfare perspective, both hardware and digital. Solutions that can actually enhance the transparency of some of these pain points. And this is not just from informing the transparency to the users, but also enabling the users of the industry to see a holistic view of what their performance has been from an ESG lens perspective. And if you think about transparency, the moment you start sort of removing paper trails and start, you know, sort of substituting with technology, you have solved for that transparency to a larger extent. And then, of course, you're in the realms of deciding the data exchange standards and data language standards, but those problems are easier to solve. So I would say these are some of the areas that I think personally in our space that we're keenly following, and we do see some interesting solutions coming rather quickly.
Yeah, I mean, I think, you know, just thinking about it, I mean, we're spending a lot of time on ESG, on decarbonization in our core business. And I mean, what I'm noticing is it's not so much a technology issue, but, you know, it's a lot just kind of disrupting business models and doing things differently. And, you know, that quote, I forget which VC said it, you know, software is eating the world. I think that's applicable to shipping. I mean, yes, there are, you know, hardware issues, but that's not necessarily, there can be some technology and maybe there'll be something radical, but it's also just doing things differently, doing things more efficiently, setting up new kind of businesses. And I think that's what's so interesting. And these are really, you know, issues that startups can tackle, because you don't need, you know, huge amounts of capital to get started, and you can start small and build up on all of that. So I think it's fascinating to see that. So maybe, I think we're coming to the end of the panel, but maybe to end, you know, this is marine money, you know, it's shipping in the end, it's still very conservative. So, you know, from a kind of a startup's perspective or a VC's perspective, you know, how, like going back to the first question, is shipping ready? Are ship owners ready? Is the ecosystem, you know, ready broadly, right? Yes, at the top end, or you're seeing a lot of new things. But do you see, you know, there's 100,000 ships, you know, and I don't know, 25,000 ship owners. Do you see today, or if not today, you know, by when do you see shipping really becoming receptive to change, right?
You know, that question is similar to when someone asks me, you know, how do you know your wife is the woman you're supposed to marry? I say you will never know the answer. You know, the only way is to invest, start the ecosystem going. You know, as you start the ecosystem going, there'll be more and more people investing. Yeah.
I'm going to build on that because, you know, when I get asked, how do you know your wife was the one you should marry? I think when you meet her, you know. So I think, look, the very fact that there's so much more prevalence of CVC structures in shipping, shipping's ready. The very fact that shipping's got big, hairy problems that need to be solved, the very fact that we need desperately to attract talent and capital from a lot of different sources, and the very fact that we need that across the spectrum of maturity of investment, I'm going to say shipping's ready, and collaboration with allocation is a heck of a lot more fun.
I'm just going to build on to the first point, right? Technology actually helped me solve a lot of that problem when I found my wife, so hey. I think shipping is definitely ready. Yes, you would have some early adopters beating the drum, which is needed. you would have some failures, marquee boilerplate failures, which is needed for the industry as well. But ultimately, let's take a minute here and think about the VC style of thinking. They're also looking after financial returns. So if a solution is built, it's able to solve for a problem and save you money. We in shipping like money, right? So I think that's going to be also a key sort of driver going forward as new solutions come on the horizon.
Yeah, and I think just the fact that we're sitting at Marine Money talking about VC and not everybody has left the room is a good sign. So I think on that note, thank you very much. And